By the end of this video, you will know exactly how to build a tax-free retirement fortune using the single most powerful account the IRS has ever created. And you will have a step-by-step plan you can start today, even if you have never invested a single dollar in your life. Here is a number that should make you angry. The average American pays over $200,000 in taxes on their retirement savings. $200,000 that could have been yours, gone forever, handed straight to the government because nobody ever explained the one account that could have eliminated that tax bill entirely. But before we get to the strategy, most financial advisors never tell their clients, one that can legally shield hundreds of thousands of dollars from the IRS and shave years off your journey to financial freedom. Let me break down exactly why the Roth IRA explained properly will change everything you thought you knew about retirement. In the next 17 minutes, you are going to learn 3 things that took me years to figure out. First, why the Roth IRA is mathematically superior to every other retirement account for most people, and I will prove it with real numbers. Second, the 5 devastating mistakes that turn this powerful wealth-building tool into a mediocre savings account. And third, the advanced loophole that lets you contribute to a Roth IRA even if you make too much money to qualify. Quick, if you have ever felt confused about retirement accounts, overwhelmed by tax rules, or worried that you started too late, hit the like button right now. It tells the algorithm this content is valuable and helps us reach more people who need to hear this. Let me paint a picture for you. Sarah is 32 years old, makes $65,000 a year, and just opened her first retirement account. She went with a traditional 401k because her coworker told her it would lower her taxes. Sounds smart, right? Fast forward 33 years. Sarah is 65, ready to retire, and her account has grown to $1.2 million. She did everything right. She maxed out her contributions, invested consistently, never touched the money. But here is where the nightmare begins. Sarah goes to withdraw her money and discovers that she owes the IRS over $240,000 in taxes, nearly a quarter of her entire life savings gone. That monthly retirement income she calculated, it just dropped by 20%. The beach house she dreamed about? She can no longer afford it. This is not a hypothetical scenario. This is happening to millions of Americans right now, people who worked their entire lives, saved diligently, and are watching the government take a massive bite out of their nest egg at the worst possible moment. But here is what nobody tells you. There is another path, a path where you pay $0 in taxes on your retirement withdrawals, a path where your money grows completely tax-free for decades, a path that the wealthy have been using for years while everyone else hands their hard-earned savings to the IRS. That path is the Roth IRA, and once you understand how it actually works, you will never look at retirement the same way again. Let me start with the fundamental concept that makes this account so powerful. When you contribute to a Roth IRA, you use money you have already paid taxes on. That might sound like a disadvantage at first. Why would you want to pay taxes now when you could defer them until later? Here is the key insight. With a Roth IRA, every single dollar of growth, every dividend, every capital gain, compounds completely tax-free forever. Let me show you what this means with real numbers. Say you contribute $500 per month starting at age 25. Assuming a 7% average annual return, by age 65, you will have approximately $1.2 million. In a traditional retirement account, you would owe roughly $240,000 in taxes when you withdraw that money, assuming a 20% tax bracket. In a Roth IRA, you owe exactly zero. You keep the full $1.2 million. That $240,000 difference is not just money. It is 4 years of retirement income. It is your grandchildren's college fund. It is the difference between surviving and thriving. The second thing you need to understand is the contribution limits, because here is where most people get this wrong. For 2024, you can contribute up to $7,000 per year if you are under 50, or $8,000 if you are 50 or older. That breaks down to $583 per month. Now, most people hear $7,000 and think that is not enough to build real wealth. That is the mistake. They contribute inconsistently, skip months when money is tight, and never maximize their annual limit. The fix is automatic contributions. Set up a recurring transfer from your checking account on the same day every month, preferably right after payday. Treat it like a bill that must be paid. The IRA contribution limit resets every January 1st, and here is the insight that keeps people watching. Every year you do not max out your Roth IRA is a year you can never get back. Those contribution limits do not roll over. Miss them, and that tax-free space is gone forever. Stop. Before I continue, this next part is critical. The third concept is income limits, and this trips up more people than anything else. For 2024, you can contribute the full amount to a Roth IRA only if your modified adjusted gross income is below $161,000 for single filers or $240,000 for married couples filing jointly. Above those thresholds, your contribution limit starts to phase out. Above $176,000 single or $240,000 married, you cannot contribute directly at all. Most people who earn above these limits assume they are locked out forever. That is the mistake. They give up on the Roth IRA entirely and resign themselves to paying taxes in retirement. But there is a completely legal workaround that I will reveal later in this video, one that high earners use to get Roth IRA benefits regardless of their income. Keep watching, because this strategy alone could save you hundreds of thousands of dollars over your lifetime. The fourth concept is investment choices within your Roth IRA, and this is where I see the most money left on the table. Opening a Roth IRA is just step one. The account itself does not make you money. It is simply a container with special tax treatment. What you put inside that container determines whether you retire wealthy or barely scrape by. Here is where most people get this wrong. They open a Roth IRA, make their contribution, and leave the money sitting in a money market fund earning 2%. I have seen accounts with $50,000 sitting in cash for years because nobody explained that you actually have to invest the money. The fix is simple. Once your contribution hits your Roth IRA, immediately invest it in low-cost index funds. A total stock market index fund with an expense ratio under 0.1% is all most people need. This next section changed everything for me when I finally understood it. The difference between 2% and 7% returns over 40 years is not just significant, it is life-changing. $10,000 at 2% becomes $22,000. That same $10,000 at 7% becomes $150,000. Same contribution, 7 times the result, just because you actually invested the money. The fifth critical concept is the 5-year rule, and ignoring this can cost you thousands in penalties. Roth IRAs actually have 2 5-year rules. The first applies to your contributions. Your Roth IRA must be open for at least 5 years before you can withdraw earnings tax-free and penalty-free, even after age 59 and a half. The second 5-year rule applies to conversions, which I will explain in a moment. Each conversion has its own 5-year clock before you can withdraw that converted amount penalty-free. Most people skip this step. Don't. They assume that once they hit 59 and a half, all restrictions disappear. Then they face unexpected penalties because they opened their account only 3 years ago. The fix is to open your Roth IRA today, even if you can only contribute $100. Start that 5-year clock ticking immediately. The micro insight here is powerful. Even if you cannot max out your contributions right now, having an open Roth IRA with any amount establishes your timeline. Your future self will thank you. If you have made it this far, you are already ahead of 95% of people, and what I am about to share in this next section is the most valuable part of this entire video. Do not skip it. Subscribe to @WealthDecode Plus if you have not already. We drop a brand new money strategy every single day at 6 p.m. Hit that notification bell so you never miss one. I need to pause here because this is where most people go wrong. The sixth concept is the Backdoor Roth IRA, and this is the advanced loophole I promised earlier. Remember those income limits I mentioned? If you earn too much to contribute directly, there is a completely legal two-step process that lets you fund a Roth IRA anyway. Step 1. Contribute to a traditional IRA. There are no income limits for traditional IRA contributions, though deductibility phases out at higher incomes. Step 2. Immediately convert that traditional IRA to a Roth IRA. This is called a Backdoor Roth IRA conversion. You will owe taxes on any gains between contribution and conversion, which is why you convert immediately, ideally the very next day. Here is where most people get this wrong. They have existing traditional IRA balances, which triggers the pro rata rule. This means you cannot just convert your new contribution tax-free. The IRS treats all your traditional IRA money as one big pool. The fix, if you have old traditional IRA balances, is to roll them into your employer 401k before doing a backdoor Roth. This clears your traditional IRA slate and makes the backdoor conversion clean. This strategy alone can save high earners over $500,000 in lifetime taxes. The seventh and final concept before we get practical is the mega backdoor Roth, and this takes everything to another level. If your employer 401k plan allows after-tax contributions and in-service distributions, you can potentially contribute up to $69,000 per year in 2024 and convert the after-tax portion to a Roth. Not every plan offers this, but if yours does, you have just unlocked a wealth-building superpower. Check with your HR department specifically about after-tax contributions and in-service Roth conversions. But here is what nobody tells you about this strategy. Even if your current employer does not offer it, your next one might. When evaluating job offers, the retirement plan details can be worth tens of thousands of dollars annually. A lower salary with a mega backdoor Roth option might actually be the better financial choice. Now let us get practical with what you should actually do. Today, within the next 10 minutes, open a Roth IRA if you do not have one already. Fidelity, Schwab, and Vanguard all offer free accounts with no minimums. The entire process takes less than 10 minutes. Choose one and do it right now. Today, before you forget. This week, set up automatic contributions. Calculate how much you can contribute monthly to reach $7,000 annually. That is $583 per month. If you cannot afford that, start with whatever you can. $100 monthly is infinitely better than zero. Then choose your investments. A simple total stock market index fund is all you need to start. Do not overthink this. A 90% correct decision today beats a 100% correct decision you never make. This month, establish your complete retirement system. Review your employer 401k to maximize any company match first, since that is free money. Check if your plan offers after-tax contributions for the mega backdoor strategy. Calculate your tax bracket to confirm Roth makes sense for your situation. Use free tools like Personal Capital for tracking or your brokerage app for automatic investing. Set a calendar reminder to review your IRA contribution progress quarterly. Now let me answer the question I posed at the very beginning, the strategy most financial advisors never tell their clients. Here it is. The real power of the Roth IRA is not just tax-free growth, it is tax-free flexibility. Unlike traditional retirement accounts, Roth IRAs have no required minimum distributions during your lifetime. You never have to withdraw if you do not want to. This means you can let that money compound tax-free indefinitely and pass it to your heirs, who also receive it tax-free. This is multi-generational wealth building, and it is something the traditional 401k simply cannot offer. Your Roth IRA can become a tax-free inheritance for your children, and with proper planning, their children too. Let me recap the 3 most important takeaways from everything we covered. First, the Roth IRA is the single most powerful tax-advantaged account available because you will never pay taxes on the growth, potentially saving you hundreds of thousands of dollars over your lifetime. Second, open your account today and automate your contributions because every year you miss is tax-free space you can never reclaim. Third, if you earn too much to contribute directly, use the Backdoor Roth IRA strategy to access these benefits regardless of your income level. Comment below and tell me which of these 7 strategies are you going to implement first. I read every single comment, and I will personally reply to as many as I can. Your Roth IRA Explained journey starts now, and the best time to begin was 10 years ago. The second best time is today. In tomorrow's video, I am revealing the exact investment strategy I use inside my own Roth IRA to maximize tax-free growth, something that took me years to figure out and most people never learn. Subscribe right now so you do not miss it.